When you look at analyzing the value of an asset and take back then in the early days of the 80s of WPP, the type of assets you were purchasing, how would you compare that to today with S4?
Well, it's a very, very different model. That both Sarches, where I was previously to WPP, WPP and Sarches were what I call market share models. In other words, and this is not a phenomenon that started in the 80s with me or John Wren with Omnicom, or probably those are the two, and then later on with Publicis and Morris Levy or Dentsu. Um, this is a model that started in the 1950s, so it has run its course. I mean, it's been around for 70 odd years. Marion Harper of IPG used to fly around in a big jet. I think that was, you go back to the history, amazing actually. I mean, it was sort of some, flew around, flew into London. I mean, when you read some of the books about it, it was quite funny in a way. But it started with him, and his view was, I think, that principally for conflict reasons, because you couldn't service Unilever and Procter in the same agency. They wouldn't accept it. You had to have different channels or verticals or organizations. So primarily for conflict reasons, you had separate businesses. And so the idea was, you had McCann and you added Lintas. They bought Lintas from Unilever because it was actually Lever International Advertising Services. That's what Lintas stood for. And they had these separate brands, and it meant you knew if you had competing brands or you launched a competing brand that you would lose, cannibalize some of your existing businesses. So it's a bit like detergents at Procter or Unilever. You knew you'd lose sales because of cannibalization, but on the other hand, you build your market share overall. So very much what I would call a market share model, whereas S4 is really about growth and about top line growth. I mean, the biggest determinant of total shareholder return, of added value to shareholders, is like for like growth. This morning WPP has its Capital Markets Day, and it talks about accelerating growth. I mean, the growth they're accelerating to is about 3 or 4% a year, which is a modest target, to say the least, when GDP is growing at about that rate. But everybody understands that margin, in the market share models, margin probably is equally important as top line growth, and you balance the two. Certainly in our incentive plans at Sarches and at WPP, it was very much about top line growth and margin equally weighted. Today, I would say it's 2/3, 3/4 top line growth, maybe even more than that, but with decent margins. I mean, at S4, we're doing 20% after central costs, a bit more actually. There's not much operational leverage in the business in the classic sense.